Hey investors, today I'm going to be doing a little bit of a video, and I might just do this over the next couple of weeks every Sunday just to see how it goes. But basically, I'm going to be breaking down a couple of different stocks that have a bullish chart pattern, and then we're going to actually see if they are good investments. But what I really want to say today is these are all charts that were all seen by basically an investment software that TD uses, and that is why we're going to be breaking this down today. See if these stocks will do well over the next week. They should. The charts are lining up to do so, but don't just use this video for short-term investments. Use this video to be able to learn some of these different chart patterns so that we can see them in other stocks as well. Let's get down. Let's check these out. So this is a continuation wedge. This is SRAX, and this is a bullish event that just happened. So it's trading within a range right here, and then it dipped below that range, which is usually a negative thing. However, what we do have is a W, and that W, from if you are tracing it down, the stock just broke past that line. This has also had a very similar wedge that is starting to happen with the bottoms of that W. This is now breaking past that wedge, which should also not just show us that it's a bullish pattern, but also it just broke past its bottom that it just bottomed out past. So because it's now broken out of this wedge, but also broken past back into that lower average that it was having right there, this is showing the software that there could be a massive jump in stock price. So massive, in fact, that it could get back up to the $6 mark according to the software. This next stock is TGH, and it's had basically a W. Anytime you see a W, it is usually meaning winning. So this may have a small jump. It's just hit a double bottom. The only issue is the volume isn't very massive. We don't see it on this graph that I'm showing. It is farther down, but the volume is not massive, but it should be good enough to get in and out of quite quickly. Before we continue, however, I really want you to know that before you go into any of these stocks and say, I want to buy, I really want you to do your own research and to see if this investment, this certain company, and all the companies that I talk about, if you look to invest into them, don't just take my word for it. Do your own research. See if this company has a earnings history. See if these companies suit your portfolio. None of these really suit my own portfolio of high dividend paying stocks, but their charts are lining up very nicely. So this is another continuation wedge. This is another double bottom. This is another W that we have. But when we see this W starting off and it's hitting that double bottom and it comes back up, and if you trace a line down from the bounce point to here, and then if you continue that line down, if it doesn't go past this line and it goes back down, that means it's a down pattern. If it breaks past this line, which we see that it has, this is now a bullish pattern and it's going to go higher. This individual stock is called EDV. This one also had a nice trajectory as well. It did dip briefly right here, which could be a sign of weakness before this. However, this right here is a bullish pattern. This is a bearish pattern, and so is this. So keep that in mind. So this next one is a stock called, or ticker is SEA. And from here, what we have is a downwards pattern, very negative, continuing to go down. However, it finally broke through right here. And at that point, anytime that there's a downwards pattern, you can actually measure it with lines and it starts to break through, it's usually a good time to buy because there may be a small jump continuing there. However, we do see a bottom out pat, or it's starting to go back down. Now this could be classified as a dead cat bounce. And then if that was a dead cat bounce, what you would normally see is, of course, it's starting to go back down and continuing to go down. However, it did bounce right here twice. So we've seen it bounce here and we've seen it bounce here. From there, that makes a triangle, which is positive if it's after a downwards trajectory, especially when you start adding in that there is a triangle wedge starting to happen as well, and it just broke through right there, which means that there could be some positive movement. Again, anytime that you are looking at a negative company, this is a very risky trade, and I always try to shy away from recommending risky trades. However, if you feel like you've got maybe $50 or even $100 in casino money, what I like to call it, and you don't have a platform that charges you a commission, you could make a couple of bucks off of this. How I really look at these types of trades is short-term 2, 3, or 4-day trades. And if you run with a platform that has no commissions, you can take very small trades and make a couple of extra bucks over a couple of days, and it's essentially able to make you some money. But there is risk, and you have to remember that. How risky do you want your portfolio? I always say to have at least 0.5 to 1% of your portfolio being risky. And that level of risk could be different for everybody. For me, my version of risk is investing in things like Tesla, while other people's risk could be this stuff where it's companies that we may have never even heard of before. Remember, this is risky. Do your own research. Don't just go by my words or the charts that I'm looking at. Do your own research. See if it fits your portfolio. And if it does, then invest. But if it doesn't, don't just go by a random YouTuber online. Make sure you do your own research. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.